and communication. The headset will be pricey, however, and probably cost well north of $1,500. The product will be Apple's first big new bet since the Apple Watch launched 7 years ago, and it should enable an all-new class of applications and a developer ecosystem through an onboard app store. Apple then plans to use WWDC 2023 to engage VR and app developers to write software. The first headset, however, is only the beginning for Apple's ambitions in the space. The company is planning a standalone augmented reality headset as a follow-up later this decade. I'm Mark Gurman. This is Power On.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon. Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Well, Fed hedge minutes show FOMC saw the need to eventually slow rate hikes, but also noted risks of tightening too far or inflation becoming entrenched. China downgrades. Goldman Sachs and Nomura cut their GDP forecast, warning a power crunch and COVID lockdowns could weigh on demand. And the combination spells risk off, Fed angst plus China sour sentiment, while European stocks struggle for direction. So this is a picture across equities. We have a great chart. I have to say, the MLive blog today on the Bloomberg terminal is extremely funny. So congratulations to Venram, Mark Hudmore, and the rest of the team for keeping us entertained in August. Now, they talk about, of course, the fact this big debate about whether the bulls or the bears are right when equity comes into play. And actually, they have a great looking at, if we don't look at the key catalyst, which is next week at Jackson Hole starting on August 25th, if you just look at the consolidation phase that we saw in global equities across the world, it has had a huge impact. I think overall, we're looking at softer equities maybe in the next couple of weeks. They argue just because of the run from early June. The DAX gaining 0.4%. Everything else is pretty much flat or even unchanged. The FTSE down 0.2%. Now, let's also look at the sectors that are on the move, because there has been quite a lot of volatility when it comes to tech sector. This is because of some of the earnings that we had in the U.S. And then we also had retail sales in the U.S. Our Charlie Wells was bringing us the latest from Walmart, better than expected. Not really filtering through to Europe right now, because retail is kind of here, middle ground, 0.1% higher. But we have auto parts gaining 0.8%, and the banks down 0.6%. So the minutes from the Federal Reserve's July meeting have revealed concerns that the central bank may need to start cooling off rate hikes, even as it made it clear that it still needs to push further into restrictive territory. Ultimately, officials agreed on the need to eventually dial back the pace of rate hikes whilst monitoring the effects of tightening. Well, let's focus on what this means for emerging markets. Joining us now is Carlos de Souza, emerging market strategist and portfolio manager at Vontobel Asset Management. Carlos, thank you for joining us. First of all, how high can the dollar go? Is there anything that can actually stop its ascent?
Well, the US dollar is quite strong already by any measures of fundamentals, by real effective exchange rate. It's already a very strong currency. So while it can remain strong based on the fact that the Fed is hiking rates at a faster pace than other developed market central banks, it's not clear to me that it can strengthen quite a bit more. For emerging markets, it's a little bit different because actually emerging market central banks, not all of them, but many of them are hiking at a way faster pace than the US Federal Reserve. And they actually started last year. They started way earlier than the Fed. So if you look at the dollar against emerging market currencies, it actually has strengthened less than against other developed market currencies.
But Carlos, so I know, a month and a half ago, you were basically saying that emerging market, I think local currency debt has been resilient despite this strong dollar, and you're expecting this to continue. What if it didn't? Is there something that you worry about that could come and take investors by surprise?
Well, of course, inflation could be more persistent than investors are currently expecting. And that would be negative for emerging market local debt, of course, because that would mean that the Fed would have to hike more than the market is currently expecting. And probably emerging market central banks would also have to hike more than currently expected. And yeah, that would be a surprising negative shock. But yeah, let's see. It's very difficult to predict inflation month to month, as the latest inflation numbers in the U.S. Have shown. In the last month, in July, actually inflation was a little lower than expected. So let's hope it continues that way. But we'll see.
Yeah. Are you expecting emerging market central banks to continue being more aggressive than developed nations in actually trying to fight inflation?
Yeah, totally. There's a number of emerging market central banks that will probably be hiking by 100 bips in the next couple of meetings or more. So yeah, I do expect that. I think real interest rates are already much higher in emerging market central banks, and will continue. That will continue to be the case. So the carry on emerging market local debt at the moment is as attractive as it has been since early 2017. So it's quite a game changer compared to the previous 5 years.
Carlos, again, we talk about emerging markets, but they're not all equal. So is there one emerging markets that you think is, looks like great value at the moment, maybe because of some of the structural reforms being put in place? Where is it? Which one is it, and what part of the world in general do you prefer?
Yeah, talking about local currency specifically, I think Brazil and Colombia are quite attractive right now. The reasons are because these countries are a little bit ahead of the cycle, particularly Brazil. It's basically almost done with the hiking cycle. There is a bit of uncertainty if they will hike by another 25 bips in the next meeting, or they're already done. But policy rate is already 13.75% in Brazil. So this is probably going to be the first emerging market central bank to start cutting rates in 2023, and offers one of the most attractive carry. Colombia is not as ahead in the cycle as in Brazil, and in fact, Colombia is one of those countries where I think the economy is overheated, but you already have double-digit rates in Colombian coltes, which are the local bonds, and the currency is also quite cheap. And the central bank also has been hiking quite aggressively, even though it's not nearly done yet. But yeah, these two I would highlight. I think there are other countries where there's also some attractiveness, like, for example, South Africa, Indonesia, perhaps a bit early, but perhaps Hungary could also be a candidate. Yeah, I'll leave it there for the sake of time.
What is the one? So, and this is because they look at they look cheap compared to some of the fundamentals, or because you're expecting reforms to come into play for these local currency markets?
It's a combination of very attractive carry, cheap currency valuations, and just high commodity. It depends on every case. High commodity prices support the momentum for South Africa. It's a completely different case in Hungary, where you just have yields in the bonds that you have never seen in recent times. In Hungary, and a central bank that is becoming a little bit more orthodox than in the past, perhaps not sufficiently to convince the majority of the market yet, but I believe they're getting there. So it's not really about structural reforms or anything like that, to be honest.
All right, so Carlos, thank you so much. Carlos de Souza, their emerging market strategist and portfolio manager at Vontobel Asset Management. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Goldman Sachs and Nomura have downgraded their forecasts for China's economic growth even further. Goldman lowered its projection for this year to 3% from 3.3%. Nomura went even further, slashing its forecast to 2.8%. The energy crisis is adding more uncertainty to the outlook. Egypt's central bank governor resigned yesterday, just a day before an interest rate meeting. According to state-run media, Tarek Amr was appointed advisor to the president, but no further details were given on the resignation, and it wasn't announced who would take over as the next governor. Ukraine's credit score has been lifted out of default by Fitch. That's as the nation enacts its agreement with creditors to delay debt payments. It comes after bondholders agreed to defer about $6 billion in principal and interest payments for 2 years to help the war-torn country. Britain is set to face days of disruption in the so-called summer of discontent. Rail workers are set for nationwide strikes as bus and underground staff hold walkouts in London. That industrial action will be followed by an 8-day strike by dockers at Felixstowe, the UK's largest container port. It threatens shortages of everything from toys to consumer electronics and clothes. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Laura Wright in London now. Coming up, life after Anderson, Bailey Gifford, bleeds money just months after its visionary leader retires. For more, we have today's Bloomberg's Big Take. That's coming up next, and this is Bloomberg.
VK ฟิล์มฟิล์มรถยนต์เกรดสูงกันน็อตสูงสุด 76%
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 41 minutes into the European trading day. If you look at stocks, I mean, the DAX is actually really powering ahead. That's supported by some of their big caps. Overall, U.S. futures, though, dropping. Optimism over the Fed. A lot of investors took it actually as a dovish message, and then there's a bit of a reversal after that. Now, before Kathy Wood and ARK Invest, before crypto and stonks, a little-known investment management firm based in Edinburgh transformed over the last decade into one of the world's top-performing funds of its kind. Now, led by James Anderson, Bailey Gifford grew to have nearly $500 billion in assets under management, with early bets on Amazon and Tesla. Now Anderson has retired and the firm's bull run has slowed, and that's today's Bloomberg Big Take. Now, for more on all of this, we're joined by the author of the piece, Bloomberg's asset management reporter, Lukia Giftopoulou. Lukia, thank you so much for joining us. I mean, this is an amazing story, so I urge everyone to really go and read it. We'll also push it out on social media. But this is basically a small Scottish asset manager and how he became such a huge player and now kind of trailing off because of volatile markets.
Exactly. This is nothing short of a fascinating story, Francine. So Bailey Gifford has been around for more than a century. It's gone through various existential crises. During the late 70s, it lost a big client, nearly collapsed. It's a partnership, so they don't have shareholders. They don't have to answer to anybody but themselves. And around the early noughties, they transformed themselves based on James Sanderson and some other people's ideas. Now, James Sanderson was not the CEO. He was not a senior partner. He was just a partner, and at some point, the CIO of the company. He managed through conviction in big ideas to transform the company's DNA and bring it where it is today. Around the early noughties when it all happened, they just decided to stop investing geographically and go for big things. And they spotted the big trends of the future, which shot up performance and now has brought it down dramatically.
I mean, it's just an incredible story. And this is like the cult of the personality, right? How did this man, James Anderson, transform it from the inside?
Indeed. And he's a very smart man. He's very eloquent. He's very good at convincing people. So
that helps.
It does help indeed. And you have to take a step back and think, okay. But he managed to convince everybody that this is the way forward. They have more conservative strategies still at Baillie Gifford, but his strategies were the ones that became famous and made Baillie Gifford a sensation during the COVID rally.
So what happens now? He's gone, and you kind of, what does the next, 2-3 years mean for Baillie Gifford?
Well, I think for now, Baillie Gifford is hostage to the markets because they have big stakes in all the hot names that did very well during the COVID rally and are now crushing. Being a partnership, they don't have shareholders, so they can take their time. They're telling investors, you have to wait for 10, 20 years. The Scottish Mortgage, which was James Sanderson's main fund, the two fund managers now actually told people, you don't invest with us if you don't have 5 years. So I think they're taking a very long-term investment approach, but it all depends on how long the market mayhem would last and how clients would feel about that.
Okay, it's a great story. I urge everyone to go and read it. Thank you so much for joining us. Lukia Giftopoulou there joining us on this big take. Go to Bloomberg.com or just type NI Big Take on your Bloomberg terminal if you have one. Now, OPEC's new chief says oil markets are facing the high risk of a supply squeeze this year as demand remains resilient and spare production capacity dwindles. Well, Haitham Al-Ghais spoke to Bloomberg's Manus Crani in Vienna in his first interview since taking office.
I would warn against using a major global recession still. I think we're looking at growth levels, economic growth levels, GDP rates that are similar to historical levels for now. I think still, yes, you are right. We are on the signs of potentially an energy crisis. Coming winter, I don't know what it's going to look like. We're seeing utility bills going high, skyrocketing in Europe and in the UK, in Germany, and governments are acting to take that burden off consumers. And this, again, all boils down to the issue of investment. I think it's been investment, lack of investment, underinvestment, chronic underinvestment for several years is really what's taken us to where we are today. And that's the major issue. And I think that requires a holistic solution. It can't just be solved by saying to OPEC, we need you to produce more. We're in a dichotomy, to be honest with you. I mean, if you look at the G7 statement, it calls on OPEC to act in a responsible way to ensure supplies and adequate supplies to the world. But at the same time, it asks for reduction or stopping funding of fossil fuel investments. So how can you have the two? It's
But then is the transition, do we need to tacitly accept energy transition is delayed, not denied?
Defining transition is the first key step, I think. That's one. I mean, have we really transitioned out of the use of coal? The world still uses coal. So we need to agree in a holistic way on the definition of energy transition. And I don't think transition means we should stop using oil and gas and fossil fuels. I think we should collectively work together with technology providers, with international oil companies, with international energy companies, on finding ways and means to advance technologies to decarbonize the production of oil and the use of oil or gas. And that is possible. But we are focusing a lot on transitioning away. And I don't think the world can live in the future without oil, which today comprises of about 30% of the energy mix. If you add gas to that, it's another 25 or something. And if you add coal, it's probably close to 70 or 80% of the global energy mix. So the solution is that you have to try and find technologies, ways and means to decarbonize fossil fuels rather than to push away from fossil fuels. And all forms of energy should complement each other, in my opinion. You can't just take one and replace one, and it can't be done overnight.
The new OPEC Secretary General Haitham Al-Ghais there speaking to Bloomberg's Manus Crani. Now, let's take a look at some of the events we're following today at 1:30 p.m. UK time. It's U.S. initial jobless claims and the Philly Fed business outlook. Now, that's followed by some earnings news as they load their fourth quarter results. The company is expected to benefit from a cosmetics renaissance in U.S. and Europe. Then at 3 p.m. UK time, we'll have U.S. July existing home sales data. And finally tonight, Fed Presidents Esther George and Neil Kashkari are due to speak at separate events about the economic outlook. Now, coming up, Manchester United's owners are considering selling a minority stake in the English football club. We look at potential investors. Could Britain's richest man actually be one of them? This is Bloomberg.
This month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
We are accelerating into a digitized and decentralized future.
That is why Bitcoin is here. The cryptocurrency market has roughly a $3 trillion market cap. That's a huge milestone. This is the largest, fastest wealth creation event in the history of the world. And financial institutions have only now just figured this out.
It is a power to the people kind of technology.
However, we are still tied to the centralized banking system in a way that is unnecessary.
The crypto sector today is largely unregulated.
This is a little bit like the American Wild West.
Essentially what DeFi is, it's like a big casino.
That's scary to the JP Morgans because they're seeing all this growth and they're left out.
You all can do whatever you want and I don't care.
We're seeing a revolution unfold right now. These are historic times.
Buckle your seatbelt. This is where the ride gets really interesting.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
When it comes to the Russian assets, we have been instructed by the government to exit these. For the time being, they don't really trade, and also we can't be certain about where they end up. So they are still frozen, and we haven't sold them yet. We came into this year with some underweight in shares and a less risky bond portfolio. We've taken off some of that underweight, but we remain slightly cautious on the outlook here. Clearly markets don't go down in a straight line, and we are uncertain in terms of whether we've seen a bit of a bottoming here or whether we'll see a continuation of the tough market.
Well, that was Norges Bank Investment Management Chief Executive Officer Nikolai Tangen on the market outlook and the status of Russian assets. It's one of the world's largest wealth funds. Now, let's also check in on the markets. We're 52 minutes into the European trading day. An interesting call is that actually, if you look at the DAX, is gaining some 0.4%, where everything else is kind of moving sideways. Now, U.S. futures are also dropping on optimism over the Fed minutes that we saw yesterday and actually being interpreted as quite dovish. Today, fading somewhat. Again, the Federal Reserve did signal a delicate balancing act that would then see this inflation-busting rate hike continuing to weaken or continue despite a weakening economy. Policymakers, once again, worrying and warning about over-tightening, but they do need to get inflation under control, which is why caution is probably the word of the moment as we also head into a possible catalyst, which is Jackson Hole. That starts August 25th. Now, let's focus on something fun, football. And Bloomberg has learned that the Glazer family is open to selling a minority stake in Manchester United. Now, the Daily Mail is reporting they're in exclusive talks with U.S. private equity firm Apollo for a stake. Fans of the team are calling for a change in ownership, but we understand that the Glazers are not ready to cede control of the club. Now, we're joined by Bloomberg's Leanne Gerrans with the very latest. First of all, Leanne, so much speculation. Was this started by the Elon Musk tweet, or what is going on?
Well, the Elon Musk tweet really took off, didn't it, Francine? I remember when I came into the studio yesterday morning and everyone had retweeted Elon Musk. He said he wanted to buy the club, and then he said, oh, well, I was just joking, but I am a massive fan. I really love Man U. I've supported them since I was younger. And didn't the shares really rally on that news yesterday? It was pretty amazing, isn't it? So this kind of got the ball rolling, but then we had this Bloomberg scoop, didn't we, which are saying that the Glazer family could possibly sell a minority stake in Manchester United. And there's feverish speculation in the newspapers today. So the Sun newspaper saying Jim Radcliffe, he is a British billionaire, Francine. He's also a Man U lifelong supporter. He said he could be interested in buying the club. And as you said, the Daily Mail says Apollo is also possibly interested.
I mean, this is like a huge story. I have to say, like, it gets everyone talking about who could do it and who could not. And this is on the back, of course, of the Chelsea sale. I mean, can Americans make money? Does it change the game of football? I know shares in Man U yesterday rose quite significantly.
And we did see, didn't we, that when Chelsea was sold, Americans made money there. It was Todd Bowley and Clear Lake Investments who did that sale. It's just so interesting because the Premier League is going to make so much money this year. According to reports, they could outclass their European competitors. And a lot of that is due to American investment. But also, this is a club, Francine, before we go anywhere else, that is just everywhere. It's so global, isn't it, Man U? And they were so successful. They won 13 trophies. I know they haven't won anything since 2017, but like I always say, I grew up in deep, dark Africa, and wherever I went, there was a Man United towel hanging up somewhere.
I mean, it is quite amazing.
Yeah.
Or a football cap, but then you speak to Jim O'Neill. I mean, he loves this club, like almost more than anything. And I have to say, I've rarely seen owners that are maybe not liked or, little liked as the Glazers. What does this tell us about potential buyers?
This is interesting, isn't it? Because apparently what is going to happen with the club, because Manchester United fans are so unhappy, they could hold protests on the 22nd of August, and this is when they face Liverpool at home. And this is really because the campaigners got off to such a bad start. They lost their first game 4-0 to Brentford, and this has made the fans really unhappy. And I know John, who works here with us, he's a big Man United fan, and he said it is really time now for a change of hands. And could this be a stopgap for something bigger?
Yeah, I feel like it's been like 6 years. And people say now is time for a change. And again, thanks so much, Leanne Gerrans there with the very latest on football. That's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Every single company is talked about the fact that whether it was from late May or early June till mid-July, there are pressure points.
I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce. And this is an issue. It's like an insurance policy. We don't want the oil markets to run on without the insurance policy.
We came into this year with some underweight in shares and a less risky bond portfolio. We've taken off some of that underweight, but we remain slightly cautious on the outlook here. Clearly markets don't go down in a straight line.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Fed hedge minutes show the FOMC saw the need to eventually slow rate hikes, but also noted risks of tightening too far or inflation becoming entrenched. China downgrades Goldman Sachs and Nomura cut their GDP forecast, warning the power crunch and COVID lockdowns could weigh on demand. And the combination spells risk off, Fed angst plus China sour sentiment. European stocks struggle for direction. So this is the picture across the board for the markets. Interesting to see the DAX actually holding on pretty strong. U.S. futures, though, dropping. Optimism over Fed minutes pretty much waning. Now, policymakers did warn against over-tightening, signaling the potential for slower rate increases at some point. They also did flag the risk of inflation pressures coming entrenched. Norges Bank also coming out with its decision saying rates, or the rate, to most likely be raised further in September. They've just raised their benchmark actually to 1.75, but that was widely expected, according to economists. Now, if we look at the map of European stocks, there is a bit of a difference, for example, compared to Germany gaining some 2.2% compared to the FTSE. We'll see exactly what the day will bring, but a lot of this index is actually muted because a lot of the economic growth is tied to raw material companies, bank and industrial goods maker, and they're actually under a little bit of pressure in today's trading session. Now, the minutes from the Federal Reserve's July meeting have revealed concerns that the central bank may need to start cooling off rate hikes, even as it made clear that it still needs to push further into restrictive territory. Fed Governor Michelle Bowman spoke about the U.S. labor market.
Although we still have about 4 million people out of the pre-pandemic workforce, we continue to see strong employment gains and low unemployment rates, the kind of labor market that has historically pulled in more workers.
Now we're joined by Janet Moy, head of market analysis at Brewin Dolphin, and Denitska Tsekova from our markets team. So thank you both for joining us. Denitska, let's start off with you. When you look at how the markets react to the Fed, they're dovish, they're going to cool off interest rates, and then they thought about it, and actually they're a lot less dovish than they were yesterday. Yeah, we're definitely seeing kind of a step back. And if you look at the risk assets, there was a very strong rally for a very long time. But if you look what is happening now, if you look at unprofitable tech, if you look at more shorted stock, even big growth companies, we're seeing a big cool down there. And that was yesterday, and this is continuing today. But of course, let's not forget, we're 17% up from the bottom in June in the S&P. Nasdaq is 21. US stocks are outperforming their global benchmark. Volatility is down across stocks, bonds, so it's too soon to call the end of the risk-on sentiment. Yeah, and then, I mean, like half the people think that, they're bear market and the others are doves. Are people, Janet, a little bit too optimistic actually about how likely it is that we can solve the inflation problem like that?
Hi, Francine. Good morning. Thanks for having me. Yeah, I do think that markets are a bit too optimistic at the moment. There's a lot of complacency. While we do think that U.S. inflation is likely to peak or has peaked, it is still going to be very elevated and not to the Fed's liking. And I think the thing that we notice is that financial conditions in the U.S. has actually eased quite substantially. So I don't think that's what the Fed wants to see. So if the equity market keeps going up, if bond yields keep falling down, then it's actually not great for inflation. So I don't think that the market is right to so early and pricing in so much Fed pivot.
But so, Jen, why so much complacency? What is the market misunderstanding?
Yeah, I think the major development that we've seen since mid-June is the sharp fall in the U.S. gasoline prices. Yep. Basically, we noticed that the pickup in the S&P 500 is basically near 1-to-1 to the fall in the percentage terms in the gasoline prices. So I think a lot of optimism comes from the fact that the energy prices have fallen, and of course, broad-based commodity prices have fallen. But I think ultimately, the domestic services side is still seeing lots of wage pressure, and hence, the core inflation is likely to be rather sticky.
Yeah, and Daneska, what are you looking at in terms of risk-on sentiment, right? You say, look, this is probably not going to be as strong, or we'll have to wait and see the catalyst for Jackson Hole. What are we seeing in terms of positioning today? In terms of positioning, we're actually seeing more bullish positioning. If you look at retail traders, they're definitely coming to a more bullish positioning. If we look at the buffer data, we're also seeing active manager really buying stocks at a very fast pace. Of course, we have to say that we're coming from extreme bearishness, so we're not going to a very bullish position. But even if you look at hedge funds, they've reduced their very, very bearish position, still bearish overall. But if you look at the CBO put and call ratio, there is definitely a sign that investors are placing bullish upside bets from here. And sentiment is quite bullish compared from where we were a month ago. Yeah, even in a quiet August, and we have a great chart put together by our Valerie. Janet, what are you looking at in terms of the next catalyst? I know we also had that surprise actually from China this week, and so much opinion pieces saying look, this will spell trouble for growth worldwide, or actually they can sustain it.
I do think that Chinese data is pretty bad. I think the economic momentum definitely has lost steam. So I think the credible course of action from the government is more easing, because they're not going to switch from the current COVID-0 strategy. So as long as that persists, I think there's no other way to boost the economy other than more stimulus. We see that actually coming from the infrastructure side of things, but it's not enough. So they have a bit of rate cut, which is not enough. So I think they would have to, first of all, address the mortgage boycott problem, because it's a huge confidence issue that affects the housing market, which 90% of Chinese own their homes. So it is a huge issue they have to address, fix the confidence, and do more easing. I think that hopefully should support the economy going into the end of the year.
All right, Jen, thank you so much. I want to ask you more about China. I saw this rather strange, actually, I think, video of an official saying, if you have a second or third home, you have to buy a fourth. So we'll dig deeper into Chinese real estate. Thank you so much for joining us, Danica Sekova there from our markets team. Janet Moy, head of market analysis at Brewin Dolphin, will stay with us. I will have plenty more, of course, throughout the day right here on Bloomberg TV. The markets, this is a picture for Norges Bank coming out with the rate hike that was more or less expected, actually was fully priced in, according to some of our market expectations. They also say they will most likely be raised further in September. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Cryptocurrencies have been very popular. If a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize us as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Goldman Sachs and Nomura have downgraded their forecast for China's economic growth even further. Goldman has lowered its projection for this year to 3% from 3.3%. Nomura went even further, slashing its forecast to 2.8%. The energy crisis is adding more uncertainty to the outlook. Global oil markets face a high risk of supply squeeze this year. That's according to the new Secretary General of OPEC, Haytham Al-Ghaz. He sees demand remaining resilient, adding that fears of slowing consumption in China have been exaggerated. He's also concerned about supply issues.
I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce. And this is an issue. It's like an insurance policy. Mm-hmm. We don't want the oil markets to run on without insurance policy.
Now, Egypt's central bank governor resigned yesterday, just a day before an interest rate meeting. According to state-run media, Tariq Amer was appointed advisor to the president, but no further details were given on the resignation, and it wasn't announced who would take over as the next governor. Here in the UK, the next prime minister faces a worsening fiscal outlook, and that raises questions about the viability of big tax cuts being promised by the two candidates vying for the top job. That's according to the Institute for Fiscal Studies, which says it's hard to square their promises with managing the nation's finances responsibly due to the fact that neither has pledged spending cuts to finance the giveaways. And Britain is set to face days of disruption in the so-called summer of discontent. Rail workers are set for nationwide strikes as bus and underground staff hold walkouts here in London. That industrial action will be followed by an 8-day strike by dockers at Felixstowe, the UK's biggest container port. It threatens shortages of everything from toys to consumer electronics and also clothes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I'd forgotten actually about the strikes, and then luckily the newsroom reminded me early this morning. Now let's turn to energy, and a fleet of ships carrying diesel is heading for European markets. facing energy security threats from high temperatures, soaring gas prices, and Russian disruption. Well, Janet Moy, head of market analysis at Brewin Dolphin, is still with us. Janet, when you look at the energy complex, and I guess a lot of actually, the energy demand, but also commodities, goes on with China. You're quite bullish on China, or at least you're an outlier calling that you don't think it's bad, maybe as the markets are expecting.
So for China, we have a bit of a contrarian view. I think there's a lot of pessimism, which might be justified, but I think it's reflected in the valuation somewhat. I think the market is short-term oversold, in our opinion, and we think that there's regulatory crackdown. Yes, it's ongoing, but we think it's reached its max probably, and also there should be more stimulus coming through. It is, I think, the stance of the officials, and they are keen to fix the real estate crisis. And also, we think that China and Asia ex-Japan region has a relatively low correlation with the major developed stock market. So if we believe that the stock market rally since mid-June in US and Europe is a bear market rally, then actually Asia, on the other hand, might be actually do quite well.
So, Jan, talk to me a little bit about some of the energy complex. What does it mean for example, access to oil? I mean, do we even talk about peak oil anymore?
So we do think that there is going to be ongoing weakness in the oil prices. Obviously, that's still much higher than pre-COVID level, but it is likely to continue to trade around $100 or below $100 per barrel, because primarily we are heading into a recession in a lot of major economies. I think most primarily with a high conviction is Europe, and that is definitely going to slow demand for energy and oil. And China, of course, the housing market is slowing, so we think that weakness is going to come from the demand side. And on the other hand, you are talking about potentially Iran, coming back online. So overall, the imbalance is going to shift to probably excess supply more than excess demand.
Janet, what does it mean where you find value? So I know in your wonderful notes you also talk about, Chinese bonds, which we don't often take a look at. Is that where, do you see value there?
So we think that if China continue to ease policy, I mean, they did a 10 basis point cut recently in the medium-term lending facility rate, that they could do more. So what we observe is that, the Chinese bond market has been doing well. I mean, bond yields have actually, if you're talking about the 2-year China bond yield is actually lower than the U.S. counterpart at the moment, which is quite rare. So bond yields in China could come back lower at a time when developed market bond yields are likely to head higher. So there could be value there in the short term.
Yeah, Jan, I mean, do you see, I know you make a difference between, of course, Europe and the UK. Who has the toughest job in keeping inflation under control whilst not putting the economy on their knees?
To be honest, I think both economies face a similar problem, but I think UK particularly difficult because we're talking about, the energy price cap lift, very, very difficult to gauge because it's going to be adjusted quarterly from 2023 onwards, and the gas prices is still widely swinging and on the upside mostly, and that's completely out of control of the Bank of England. And we still have a pretty strong labor market, quite resilient economy, so wages are still pretty strong, 6% at the moment. So I think both the core and the headline are both harder to come down in the UK, whereas Euro, I think everyone knows that the growth is weakening there, so and the wage growth is not as strong.
So Jen, I mean, I don't know whether I ask it, philosophically, but I guess all central banks around the world now have a choice on, the lesser of two evil. Do you take inflation down, hurt economic growth, or do you try and support growth and actually leave inflation a bit higher than you want it? What's the right way to be thinking of this?
Yeah, I think the priority would definitely be fighting inflation because you're talking about, very high inflation. In the UK, we just had 10.1%, 5 times the official target. In the US, 4 times official target. So this is definitely, it hurts everyone, right? It hurts the stock market, it hurts the real economy, it hurts people's spending power, it hurts confidence. I think definitely inflation fighting, because once you bring inflation down, then you can support growth and things can recover from there.
Do you think we've reached peak inflation in the US?
In the US, probably, if we continue to see that gasoline prices come down or even stabilize, then you see that year-on-year impact on the headline. And the energy contribution to headline US CPI is just much less than that in Europe and UK. So on that headline, CPI discussion is much easier for US to come down. So probably we may have seen US peak inflation, but as I said, the core is still pretty sticky. But ultimately, we expect that to slow as well because we are seeing quite a massive slowdown in the US housing market data, and that would feed through with a lag, but it's not going to happen in the next 3 months.
All right, Janet, as always, thanks so much for joining us. Janet Moy there, head of market analysis at Brewin. Owen Dolphin joining us this morning. Now, coming up, the U.S. and Taiwan have started formal negotiations on a bilateral trade initiative. We have more on that story next, and this is Bloomberg.
Month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
VK ฟิล์มฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade, we want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity, we want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK, have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When it comes to the Russian assets, we have been instructed by the government to exit these. For the time being, they don't really trade, and also we can't be certain about where they end up. So they are still frozen, and we haven't sold them. We came into this year with some underweight in shares and a less risky bond portfolio. We've taken off some of that underweight, but we remain slightly cautious on the outlook here. Clearly markets don't go down in a straight line, and we are uncertain in terms of whether we've seen a bit of a bottoming here or whether we'll see a continuation of the tough market.
Well, that was the Norges Bank Investment Management Chief Executive Officer Nikolai Tengen on the market outlook and the status of its Russian assets. Now, it's one of the world's largest wealth funds. The U.S. and Taiwan have started also formal negotiations on a bilateral trade initiative. Now, the U.S. says the first round of talks will take place early this fall. Well, the move is likely to further inflame tensions with China, already high after House Speaker Nancy Pelosi's recent visit to Taipei. Well, joining us now for more on all of this is Bloomberg's Bruce Einhorn. So, Bruce, what more do we know about the trade talks?
Well, Francine, this is something that the two sides had announced in June that they were going to move ahead with. So now we have more details about when negotiations start. So we're expecting that they will begin sometime in the fall. They're going to cover issues a little dry, to be sure, things like trade facilitation, regulatory practices, anti-corruption standards, and deepening agricultural trade, and other issues. It's unlikely that this will lead to any sort of a free trade agreement because Taiwan is certainly very popular in Washington on Capitol Hill. There's support for Taiwan among Democrats and Republicans. Yep. There isn't a lot of support for free trade agreements. So there are limits to what can come out of this initiative.
So this comes, of course, hot on the heels of the Nancy Pelosi visit to Taiwan. What will be the impact on U.S.-China relations, Bruce?
Right. Well, I think that is the big concern at the moment is, following the reaction to Nancy Pelosi's visit by China, where China conducted military exercises for many days all around Taiwan, then followed that after another congressional visit with more military exercises. At the moment, nothing like that this time. We do have a statement from the Chinese Foreign Ministry spokeswoman said that China firmly opposes this initiative, said that China would take all necessary measures to resolutely safeguard China's sovereignty, security, and development interests. So I think that there will be further reaction if and when anything comes out of this. The other thing that Beijing is surely watching closely is what happens probably as early as next month if the Senate takes up a bill that Bob Menendez, chairman of the Foreign Relations Committee, and Lindsey Graham, ranking Republican, have proposed that would upgrade Taiwan's status to a major non-NATO ally. That's something that surely China would oppose vociferously.
Bruce, thanks so much. Bruce Einhorn there with the very latest on Taiwan, China, and the U.S. Coming up, July saw a positive outlook for the retail sector in the U.S., but how long can consumer spending be sustained? And we look into that data next. This is Bloomberg.
VK ฟิล์มฟิล์มรถยนต์เกรดสูงกันน็อตสูงสุด 76%
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Fed hedge minutes show the FOMC saw the need to eventually slow rate hikes, but also noted risks of tightening too far or inflation becoming entrenched. China downgrades. Goldman Sachs and Nomura cut their GDP forecast, warning a power crunch and COVID lockdown could weigh on demand. And the combination spells risk off, Fed angst plus China's sour sentiment. European stocks struggle for directions. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, better than expected earnings from large U.S. retailers are putting actually a positive spin on stocks ranging from Walmart to Home Depot. But can consumers keep the momentum going? Well, joining us now is Bloomberg's Charlie Wells. Charlie, we're talking about some of the shipping costs from the U.S. to the U.K. For the people that are not that familiar with these big U.S. Retail companies, like what's Target and what's Walmart?
That's a really good question. So Walmart really is the largest retailer in the United States. In a lot of ways, its customer base really represents the population of the United States. So if we're trying to look for consumer data, we're trying to get a sense of where the economy is headed, looking at the earnings from Walmart is incredibly helpful. It's sort of like almost like an alternative metric. Whereas Target is a little bit more elevated, right? It sort of brings in a slightly higher end consumer, and there's more discretionary spending that happens at that store. So when you dive into the earnings, which I'm happy to do, you see different stories.
So what are the stories that they're telling us about consumer spending in general and economic growth?
So the story for Walmart is pretty positive, right? So they had some dire warnings in July. There were concerns about its profitability, but actually, results came out better than expected this week. We saw, sales increase from 151, that was the estimate. They actually made it out at 153 billion. And so we saw a lot of kind of shoppers going there for kind of like the bargain element. But when you think about Target, they struggled. They failed to even meet the lowest profit estimates that were put out there. And so this was a very negative quarter for them. And what that seems to represent is going back to that discretionary. It seems like U.S. consumers may be moving away from that discretionary more towards essentials and, of course, services.
Yeah, and going for cheaper brands. So does it really give us an idea of, what we can expect in the future for consumer sentiment?
Yeah, it's that theme of kind of trading down. So trading down from, say, the upper end Target to the lower end Walmart. Even within Walmart, management was talking about how consumers seem to be trading down products. So going from, a more expensive meat to something that might be packaged, something that might be more like, canned tuna or something like that. And that home brand playing a really important role. Even at Target, that home brand, which they also have, playing a crucial role as well.
I love that. I love canned tuna. This is something that maybe not a lot of people care to know.
I wouldn't think that.
It's a good metric. So if you look at good, good earnings so far, good sales figures so far, does it give us also a good indication on whether this trend is here to stay?
Oof. Okay. I mean, the hope for these retailers is that it can stay. I think they're quite optimistic. Even Target, which had some struggles, kept its profit forecast for the second half the same. So that was unchanged. unchanged. And there is optimism that these retailers have potentially, got rid of a lot of that inventory that they were struggling to get rid of, that they had to discount, and that they could potentially have a more profitable second half. We're going into back to school. We're going into the holiday season, even though it feels like we're still on kind of August holidays. But that is a more profitable time for these retailers, and they, at least right now, are optimistic about it.
Charlie, as always, thank you so much. Always clear and to the point, Charlie Wells, looking at some of the U.S. retailers. Now we're joined by Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Sophie, thank you for joining us. We're here to talk retail, and again, inflation will start hurting their costs, but also the ones that have big, of course, boards or big, I'm struggling to find the word, but big companies, of course, will have to pay much more in energy. Can they pass on some of this money to the consumer, these costs?
Hi, good morning. Yes is the short answer. In a lot of cases they can, and the reason for that simply is that a supermarket is somewhere where you are going to go week in, week out because you need to eat. So therefore there is an element of pricing power because of that essential nature of the services. But what we're seeing is, as you were just discussing, certain brands are going to be certainly a lot more resilient than others. Walmart and the likes, and the equivalent kind of discount names in other regions around the world as well. Their customers are going to be a lot more price sensitive. We're already seeing people trading down within those value areas. So actually the landscape there is certainly very tricky. So to answer the question, really, yes, there is some pricing power because we all need to eat essentially. But really there is a limit to how far you can pump up those prices without seeing transaction volumes start to dip.
So, Sophie, how do you look at the strength that we've seen so far in the consumer actually holding up? How much is this actually also pent up demand from COVID? And so, can the trend turn very fast?
Yes, I think it can. I think at the moment, particularly in the US, we can see that savings rates are actually really quite healthy, but that will start to get chips away at as we come to the realization that inflation maybe isn't as transitory as first thought. So while the picture at the moment, consumers are actually looking certainly a lot more resilient than feared, I do think that can change quite quickly. And the areas of the market that are going to be maybe more adversely affected, more dramatically affected, are those more exposed to discretionary spend. We've seen obviously some positive news coming out of the home improvement chains, so there's a slightly different story playing out there. But certainly for the big retailers, the big supermarkets, yes, I think this could change quite fast.
How fast? So how quickly can you see a downturn in consumer sentiment, or actually a change from a higher priced item to lower ones?
Yes, so we haven't seen that kind of about turn in consumer behaviour that people were predicting was going to happen probably by this point. I think certainly for me, when I look at it, I think probably the next 3 to 4 months are really where it's going to be crucial. We were also just touching on there with Charlie that as we head into the crucial trading period for Christmas, the general kind of festive season, that really is going to be the true barometer. That is the time of year when you spend whatever you can, because it's that special, particularly commercial time of year. And I think if we start to see people reining in then the read across there is really quite stark. But I think this change could happen in the next 3 to 4 months, depending on how those savings rates hold up in the US.
So should we actually should retailers forego margins to make sure that they're not left with stocks that they can't shift?
Inventory backlogs are the absolute biggest nightmare for retailers. Walmart said back in May, at that point they had $60 billion worth of excess stock. And that can end up being a huge drag when you look at kind of the impairment charges that can come through the line. But really, it's a very fine balancing act. I personally think that it's the right move is to do some discounting, to shift some of that. And what you don't want to do is do that to the extent that you are completely annihilating your brand power, and that is more of a problem for higher end chains, where actually if you start slashing prices too much, the lines get blurry about what your position is within the market. So yes, some discounting is a sensible thing to do, but there needs to be a pretty serious strategy behind that. We've seen 132 basis point reduction in Walmart's gross margin already, and that's really quite severe. And they can't stomach this forever.
And Sophie, does it actually change the way people shop? So will people go more or less in store because high fuel prices and high energy prices?
Yes, potentially. I think we can see that, but at the same time, we're seeing a lot of potentially younger companies as well, where their fulfillment costs are rising as they're trying to bulk out, or they massively bulked out their online operations during COVID, and that's actually incredibly expensive to service if volumes are dropping. So what you can actually see is that packaging pricing could be on the up, so you could be pushing people away from online and back into store. There's also, for some people who are physically counting the pennies, we've seen in the UK a massive increase in cash spending, for example, so people can budget properly. That's easier to do in store. So I don't think we're going to see a complete change in dynamics there, but there may be a bit of a shift, absolutely.
So if you look at U.S. retail companies, Walmart, Lowe's, and Home Depot, who will come up trumps?
Well, that's the big question. I think what's really interesting at the moment, particularly when you look at Home Depot, have had record performance in the latest results. I think that, myself included, the market underestimated just how resilient DIY and home improvement spending is. And I think that is a longer-term trend that's probably here to stay. You know, the importance of our homes since COVID and lockdown living really can't be understated. And I think that with them being the biggest in the market, there's a really big backlog as well of home improvement projects. So I think that there is definitely some room to run there.
Wonderful. Sophie, thank you so much for the update. Sophie Lund-Yates, their lead equity analyst at Hargreaves Lansdown, looking at U.S. retail. Now, coming up, we'll look at life after Anderson. Bailey Gifford bleeds money just months after its visionary leader retires. We have more on today's Bloomberg's Big Take. That's coming up next, and this is Bloomberg.
This month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
VK ฟิล์มรถยนต์เกรดสูงกันน็อตสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bloomberg has learned that Apple is aiming to hold a launch event on the 7th of September to unveil the iPhone 14 line. It kicks off a busy fall season for Apple that will include new Macs, iPads and 3 models of the Apple Watch. It is a precarious time for the industry with high inflation and a shaky economy, but Apple appears to be faring better than its peers. Football now, and Bloomberg has learned the Glazer family is open to selling a minority stake in Manchester United. The Daily Mail is reporting they're in exclusive talks with US private equity firm Apollo for a stake. Fans of the team are calling for a change in ownership, but we understand that the Glazer aren't ready to cede control of the club. And the head of the world's biggest sovereign wealth fund says great uncertainty is now the new normal. Norges Bank Investment Management is the world's #1 owner of equities with roughly 9,000 stocks in its portfolio and is preparing for a downturn, with the CEO Nikolai Tangent saying this may only just be the start.
We came into this year with some underweight in shares and a less risky bond portfolio. We've taken off some of that underweight, but we remain slightly cautious on the outlook here. Clearly markets don't go down in a straight line, and we are uncertain in terms of whether we've seen a bit of a bottoming here or whether we'll see a continuation of the tough market.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, before Cathy Wood and ARK Invest, before crypto and stocks, a little-known investment management firm based in Edinburgh transformed over the last decade into one of the world's best-performing funds of its kind. Led by James Anderson, Bailey Gifford grew to have nearly $500 billion of assets under management with early bets on Amazon and Tesla. But now that Anderson has retired and the firm's bull run has slowed, well, what's it mean for the future of the company? That's today's Big Take. And for more, we're joined by the author of this, Bloomberg's asset management reporter, Lukia Giftopoulou. So, Lukia, first of all, congratulations on an absolutely wonderful story. We've pushed that on social media, and it's really looking into the small Scottish asset management and how it became, Bailey, such a big player, such a well-known player, and such a profitable player.
Yeah, it's a really interesting story, and thank you very much, Francine. So, this company has been around for more than a century. In the late 70s, nearly collapsed. In 2000, it was managing around £20 billion. So at that point, they just thought, okay, we're just going to shake it up a bit, stop investing geographically and think about big themes. And this is where James Anderson came in, and he had this idea of spotting the companies that would just trail the mega trends of the future. And they had an amazing run. During the COVID rally, the performance of the fund shot up and is now coming back down quite hard.
But this is amazing. So you were telling me that actually James Anderson was not in charge of the firm, right?
He was not.
He influenced the whole firm kind of from within, but not really in a position of power.
I think his strong ideas, his strong personality, he did not suffer fools gladly. He managed to kind of convince everyone to tilt towards his way of investing. I don't think that it was his intention to do it, but it ended up happening because he got a lot of calls right, and he made a lot of money for a lot of people, and now he's gone. The company might have to reinvent itself in a way because they're hostage to the markets at the minute.
But how? So, I mean, it's hard, right?
It is hard, but I think they have an advantage because it's a partnership, so they don't have to answer to shareholders. It's owned by 51 partners, all of whom are employees at the company. So they have time. It's a waiting game, and it will all depend on how much the clients will freak out if markets keep going down.
So, I mean, you've had this great conversation. I know you spent like months working on this. Out of everything, what was most surprising to you?
I guess my conversation with James Anderson and actually everything I'd heard about him just came into place. He's extremely eloquent. He's been interviewed here a few times about his big stake in Tesla. He can convince you. He's very. He believes in what he says, and he just waves off his influence at the company. So he was like, I did not like that. It was not my intention, but because we did so well, maybe it did create some imitation.
Lukia, thank you so much. I urge everyone to go and read today's Big Take. Lukia Giftopoulou there with a great story out this morning. Now let's get straight to the energy markets. And OPEC's new chief says oil markets are facing the high risk of a supply squeeze this year as demand remains resilient and spare production capacity dwindles. Well, Haitham Al-Ghais spoke to Bloomberg's Manus Kran in Vienna in his first interview since taking office.
I would warn against using a major global recession still. I think we're looking at growth levels, economic growth levels, GDP rates that are similar to historical levels for now. I think still, yes, you are right, we are on the signs of potentially an energy crisis. Coming winter, I don't know what it's going to look like. We're seeing utility bills going high, skyrocketing in Europe and in the UK, in Germany, and governments are acting to take that burden off consumers. And this again all boils down to the issue of investment. I think it's been investment, lack of investment, underinvestment, chronic underinvestment for several years is really what's taken us to where we are today. And that's the major issue. And I think that requires a holistic solution. It can't just be solved by saying to OPEC, we need you to produce more. We're in a dichotomy, to be honest with you. I mean, if you look at the G7 statement, it calls on OPEC to act in a responsible way to ensure supplies and adequate supplies to the world. But at the same time, it asks for reduction or stopping funding of fossil fuel investments. So how can you have the two? It's
But then is the transition, do we need to tacitly accept energy transition is delayed, not denied?
Defining transition is the first key step, I think. That's one. I mean, have we really transitioned out of the use of coal? The world still uses coal. So we need to agree in a holistic way on the definition of energy transition. And I don't think transition means we should stop using oil and gas and fossil fuels. I think we should collectively work together with technology providers, with international oil companies, with international energy companies on finding ways and means to advance technologies to decarbonize the production of oil and the use of oil or gas. And that is possible. But we are focusing a lot on transitioning away. And I don't think the world can live in the future without oil, which today comprises of about 30% of the energy mix. If you add gas to that, it's another 25 or something. And if you add coal, it's probably close to 70 or 80% of the global energy mix. So the solution is that you have to try and find technologies, ways and means to decarbonize fossil fuels rather than to push away from fossil fuels. And all forms of energy should complement each other, in my opinion. You can't just take one and replace one, and it can't be done overnight.
That's the new OPEC Secretary General Haitham Al-Ghais speaking to Bloomberg's Manus Kran. Now, coming up, Manchester United's owners are considering selling a minority stake in the English football club. Next, we look at potential investors. Could Britain's richest man actually be one of them? This is Bloomberg.
VK ฟิล์มฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Recently, cryptocurrencies have been very popular. If a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize this as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
No one covers the world like Bloomberg.
As it says, it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Football, something fun to end the show. Bloomberg has learned that the Glazer family is open to selling minority stake in Manchester United. Now, the Daily Mail is reporting they're in exclusive talks with U.S. private equity firm Apollo for a stake. Now, fans of the team are calling for a change in ownership, but we understand that the Glazers are not ready to cede control of the club. Now, for more on all of this, let's get straight to Bloomberg's Alex Webb. Alex, first of all, are you a Man U fan? Because I've been hearing for the last 5 years. I mean, we interviewed Jim O'Neill. He's like, this is ridiculous. For the last 6 years, they wanted to come in. I mean, they're just not happy with the Glazers.
Yeah, no, I'm not a Man United fan. I want to make that very clear. The team I support is partly owned by an American. I'm a Villa fan. It's partly owned by Wes Edens. But yeah, look, the thing is, the upset that the fans have at the Glazers is obviously to do with on-field performance, but partly to do with how much money has been taken out of the club. And that's actually a really important point, because in terms of lining their own pockets, that has not been the lion's share of it. Based on their public accounts, they've taken about 400 million out of the club in the form of cash in the past 17 years. That comes down to about 24 million per year. That's actually less than they pay Cristiano Ronaldo. So in that context, it isn't perhaps that great. But the big chunk is what they pay to service and repay their debt obligations. That's about $1 billion, and that translates into equity, which is where most of the value resides.
Alex, so I woke up yesterday morning, I saw that tweet from Elon Musk, and then now there's speculation that the Glazers are saying that Apollo is, maybe interested in even the UK's richest man. Was this all started by Elon Musk?
No. There's been whispers for a little while about people trying to put a bid together, perhaps a suspicion that the Glazers were willing to sell. That was, of course, confirmed by our colleague Scoop yesterday. Perhaps somebody who was trying to raise money to get a bid together had approached Elon Musk, which is why he posted this provocative tweet. Worth mentioning, of course, Man United is publicly traded in the US, so the SEC could well have a look at that.
But so, Alex, why not actually buy shares if you want? Why do you want a minority stake? Negotiate with the Glazers instead of just buying it on the market?
Well, because the shares that are publicly traded, there's about a 30% free float. They carry fewer voting rights than do the shares held by the Glazers. They have 10 votes to the publicly traded shares, 1 vote. So if you were to buy them on the open market, your ability to wield any influence of the club would be severely limited. Even then, if they're selling a minority stake, the Glazers will have more control.
Who could potentially buy the club? I mean, I feel like asking who potentially is not buying the club, given the list of names.
Well, ultimately, it really comes down to 2 names at the moment. Apollo is clearly reported to have been in talks by the Daily Mail. Jim Ratcliffe, Britain's richest man, the guy who controls Ineos, he has said publicly, or his representative said publicly, he would be interested in buying a minority stake if there was a path to full ownership or control. It's unclear that the Glazers want to sacrifice that, so perhaps Apollo seems to be in the front leading position at the moment.
A fun story. It has everything. It has intrigue, football, and of course it's even listed. Alex Webb, thank you so much from Bloomberg. A quick take on Bloomberg Surveillance Early Edition continues now in the next hour with Matt Miller, Kaylee Lyons in New York, and Danny Berger in London. And this is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
One thing we're seeing is this big tug of war between growth and inflation.
The systemic risk is that we've priced in the Goldilocks scenario.
Much of the bad news that the market had to grapple with in the beginning of the year has already happened.
The market feels it knows what the path of the Fed is going to be. And I think that that is potentially a concern for me in that it's still somewhat unclear.
They're going to persist with the rate hikes. They're going to persist at a slower pace, though, and that's what the market has gotten wind of.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today: the Fed plots its next moves against inflation. Policymakers see the need to slow the rate hike pace at some point, but they also want to gauge how monetary tightening is working. China plans more fiscal stimulus as the economic outlook worsens. Local governments will sell billions in bonds to pay for infrastructure and plug budget gaps. And news organizations want a judge to release most of the FBI affidavit that led to the search for documents at Donald Trump's house. But the Justice Department warns it could harm the investigation. Well, good morning. Welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, in for Anna Edwards, alongside Matt Miller and Kaylee Lines in New York. And Kaylee, it feels like this morning we're looking through some of the hopes of dovishness in those FOMC minutes and now casting our eyes forward to more data and that Jackson Hole meeting.
Yeah, 1 week to go until Jackson Hole, Danny. So the market is definitely gearing up for that. I would note, though, that in Asia overnight, it really was not a very strong risk sentiment. Stocks were down pretty much across the board, across Japan, China, and Hong Kong. The MSCI Asia Pacific Index as a whole was down about 0.5%. And really, tech stocks were some of the biggest laggards. The Hang Seng Tech Index down about 1%. That is despite news from Chinese state media that local governments may be shoring up fiscal stimulus and selling as much as $229 billion worth of bonds to fund infrastructure investment, really trying to shore up that China growth story after some weak data earlier this week and downgrades to the forecast from a number of shops on Wall Street. So that is a story that the equity market really doesn't seem to be buying right now. The idea that stimulus is going to be able to help that much. And I would note the Chinese yuan also weaker against the U.S. dollar, trading right around that 680 level, though every Asian currency is weaker against the greenback today. And finally, in the bond market, you saw yields moving higher really across the entire Asia Pacific, including in New Zealand, where that 10-year yield rose about 12 basis points, Matt.
All right, we'll be paying close attention to that. We're looking at futures here in the U.S. that are a little changed, but the market is really reassessing its look at the Fed minutes. In fact, that Fed minutes debate, were they dovish? Are they signaling a pivot, or are they still concerned about entrenched inflation is going to continue in today's market? Here you see the 10-year yield coming down a little bit. Okay, the 2-year yield is more reactive to what happens with the Fed, but they're following along the same pace. Right now, 288.04 is the level here, so investors are buying the bonds and pushing the yield down. The Bloomberg Dollar Index gaining some real strength here at 1273, 1274. That is usually an indication that investors are worried, looking for a little bit of safe haven. So that could be an indicator as to what we're going to see in today's session. And Bitcoin right now up, but only about 0.2%. Right now at $52 at 23,460. So still under that 24,000 level. Danny, what are you seeing in terms of the European trade?
I gotta say, Matt, it is a weird equity trading session for Europe so far. We're not really getting a clear divergence. Most benchmarks, they're a little bit up or a little bit down. We are seeing the DAX, the CAC, the FTSE Mid, those are all outperforming. UK stocks, FTSE 100, a little bit weaker today. That's been significant, a significant story with the UK outperforming so far this year. Has that story run out of steam? So little change on the overall benchmark. We did learn late yesterday in a new filing that Ray Dalio's Bridgewater has drastically reduced their short position on European stocks. Of course, we don't know the details, the contours of the totality of that bet, so perhaps only a little bit we can read into this. Bond yields on the move this morning, both UK 2-year yields and Germany 2-year yields higher by about 2 basis points. This is off the back of high UK inflation, which we broke for you in yesterday's show. A lot of differing views. We have one former BOE policy member, Andrew Senton, saying that they should double interest rates, while at the same time Danny Blanchflower says no, that would be disastrous at the moment. They should be cutting rates because of fears of recession. Now, when it comes to German 2-year yields, we also had reports of Schnabel and Kazaks talking about the fact inflation is still high. The ECB still needs to act aggressively. And finally, euro, as you pointed out, Matt, it's all about the strong dollar. So Kaylee, euro is currently trading at 101.71, weaker by nearly 0.1%.
Yep, the strong dollar, a theme we'll be watching throughout the day, Danny. And as for what else is ahead on this Thursday, we'll be getting more retail earnings. Kohl's and Ross Stores will both be reporting this morning. Then Turkey's policy rate decision is out at 7 a.m. New York time. And as Danny mentioned in her headlines, a federal magistrate judge in Florida will hold a hearing at 1 p.m. Eastern over whether to release more sealed documents related to the search of Donald Trump's home in Florida. Then on the economic data front, we'll be getting initial jobless claims and existing home sales among the prints today. And those will likely inform the Fed speak we'll hear later on this afternoon. Kansas City Fed President Esther George and Minneapolis Fed President Neil Kashkari are both speaking, Matt.
All right, we will be watching, obviously, the Fed speak because Fed officials agreed on the eventual need to dial back the pace of rate hikes, according to the minutes from July's meeting released yesterday. But for now, they remain intent on fighting inflation before it becomes entrenched. These are key words in the debate that is unfolding today. Bloomberg economy reporter Michelle Jamrisco joins us now for more. So, Michelle, what did we learn? Were the Fed minutes dovish? Was there a pivot, or are they continuing to be hawkish on inflation?
Well, Matt, there was something for everyone in here, which makes it a little bit problematic. But we did get some insights in the minutes in that tricky balance the Fed needs to strike right now. On the one hand, as you mentioned, they do mention the slowness or the slowing in the pace of the rate hikes going forward. They do say at some point. They don't give us much detail on the timing, of course. And they also mention, and interestingly enough, that they're concerned about the possibility of overdoing it on the rate hikes. You must remember, we only just started this rate hike cycle in March at a quarter point where it was at for 2 years in the upper bound. We're now at 2.5%. So they mentioned that old phrase, the long and variable lags of monetary policy. But on the other hand, of course, and this is what we've been hearing much more from Fed speakers lately and ignored by markets, is that inflation fight is far from over. So they talk about, as you mentioned, that it could become entrenched in inflation expectations and that the public could, as they say, question the committee's resolve on adequate policy. So a lot to watch in the coming days and weeks. We, of course, have the big data coming up of PCE inflation before the end of the month, and then the jobs report and another CPI report before that September 21st decision.
More volatility with an ever data-dependent Fed. Michelle, thanks so much. Bloomberg's Michelle Jambrisco there. Now to China, where the state media said local governments could sell billions in bonds to fund infrastructure investments and plug budget gaps. This is a further move by Beijing to shore up an economy hit by worsening COVID outbreaks and a property slump. Enda Curran, our chief Asia economics correspondent, joins us for more. And Enda, these moves come amid more banks, Goldman, Nomura, downgrading their China outlook when it comes to the economy. Is this enough to shore things up?
Well, it's a sign of urgency among policymakers now. They are basically encouraging the provincial governments to get on with spending the allocations that they have to go out and borrow and spend on infrastructure. Like you mentioned, it's about $200 billion in total that's expected to be spent over coming months. The backdrop is ever worsening. We have some investment houses today. Goldman Sachs downgrading their growth forecast for China to 3%, Nomura even lower, cutting to 2.8%. Most economists now say the economy is losing momentum quicker than they anticipated. We had a raft of bad data over the week. We did also have today evidence of the biggest outbreak in months in China of COVID-19. So there's clearly a lot of headwinds against the economy. The expectation is that this infrastructure spending may help put a floor under things, but it certainly won't turn around China's economy. To do that, it would require a lot more stimulus between now and the end of the year.
Yeah, and 5.5%, not something that is looking like it can be reached. Bloomberg's Enda Curran, thank you so much for joining us from Hong Kong. And sticking with China, the U.S. and Taiwan are following through on a long-time promise to deepen their ties despite opposition from China. The two countries will start formal talks on a trade and economic initiative this fall. Still, a trade agreement may be more symbolic than substantive. Both Republicans and Democrats have been reluctant to embrace free trade agreements. Then on the domestic front, President Biden has won temporary permission to once again pause oil and gas leasing on federal lands and waters after a U.S. appeals court found that a trial judge's order against the moratorium was too vague to review. Anne-Marie Horder, and Bloomberg Washington correspondent, joins us now from D.C. with more. So, Anne-Marie, we're talking about now putting that pause back in place despite the fact that President Biden has encouraged U.S. producers to pump more oil to keep gas prices down.
Yeah, not only that, he just signed the Inflation Reduction Act, which is why it's really unclear what this new pause that the president in this appeal has won, because when you look at the Inflation Reduction Act, yes, there's hundreds of billions of dollars going to green energy and climate, but at the same time, it does say the Interior Department is required to hold 2 auctions of oil and gas leases in the Gulf of Mexico. On top of that, it makes future renewable projects, so solar and wind, contingent on the government issuing some of these new drills. So it's a little bit unsure and unclear of, given what we've seen in the court throwing out this injunction that really put a freeze on these drillings, what this actually means. And Kaylee, as you pointed to, it's also a little bit awkward, right? The president came in, he wanted this pause because he wanted officials to look at the environmental impact on drilling on these federal lands. But at the same time, what we've heard from officials this year is that they are pressuring oil companies to produce more. Obviously, that is because it's an election year. There's been a very tight energy market, and they've been trying to get gasoline prices down.
All right, and no wonder oil companies have been stumped here in the U.S. all year long. Listen, on the Trump investigation, we're going to hear today whether a judge allows the release of an affidavit that the Trump camp wants out, and so do many in Congress, but the DOJ wants to keep concealed.
That's exactly right. So the Department of Justice thinks that this could impede and be very troublesome for the investigation, and they say that it can have a chilling effect on potentially having and the need for war witnesses or also future investigations, because this really provides a roadmap. And the Department of Justice says that if the affidavit is released, and even if it's redacted, it wouldn't make sense because so much would have to be redacted. But it's not just the Trump campaign. Trump on his
Updates on that hearing this afternoon. Thank you so much to Bloomberg's Anne-Marie Horder in Washington. And she will be back later this hour to discuss her latest Bloomberg Business Week story, how a Bloomberg reporter's family escaped the Taliban, an account of extreme measures it takes to get out of Afghanistan. So we'll look forward to that. But first, let's get a look at some stocks moving in pre-market trading here in the U.S. And I want to begin with Bed Bath & Beyond, the meme stock that has soared more than 400% since late July. It's giving some of that gain back, though, today, down about 12% on news that one of its biggest shareholders, Ryan Cohen, has filed to sell as much as 7.8 million shares in the company. So maybe he's looking to take a little profit off the back of this really, really remarkable rally. Now, another stock I want to check on is Manchester United, a publicly traded company that Elon Musk thought it would be funny to joke about buying on Twitter. And even though he said he's just kidding, then we got more news, a Bloomberg scoop yesterday, that the Glazer family that owns the team is open to selling a minority stake. And you had the Daily Mail saying that they're in exclusive talks with Apollo for that stake. The stock rose 7% on all of that news yesterday, but it's down about 1.5% this morning. There's some earning news out there as well. Cisco, the big computer networking company, actually gave a really upbeat forecast when it comes to revenue growth. They're being helped by the fact that the chip shortage is easing. That leads them to be able to see through more supply. And as a result, that stock up 4.4% before the bell, Danny.
Yeah, Kaylee, I find that Man U story so fascinating, a bit biased since I am here in the UK. Of course, the fans there don't like the American owners, but will they like an American private equity owner? A lot of questions around
minority,
that.
Minority owner.
Minority.
Let's make clear that it's really not that important, right? Yeah.
Okay, not that important. Interesting, nonetheless. Also interesting, this economic environment might be just as confusing to figure out as who might buy that minority stake. We'll try to figure it out with Hughes Van Lenders, Senior Investment Strategist at Van Lanschot Kempen. We'll also speak with Elizabeth Braw later in the program, Senior Fellow at the American Enterprise Institute, about all things Trump and this midterm election cycle. Plus, UK fund Bailey Gifford is trying to adapt to life after James Anderson. The star investor has been left behind, or has rather left behind, a precarious legacy. You can read all about it on today's Big Take. That's on Bloomberg.com, or by typing in NI Big Take to your terminal. This is Bloomberg.
BK ฟิล์มฟิล์มรถยนต์เกรดสูงกันน็อตสูงสุด 76%.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalysts. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalysts.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
No one covers the world like Bloomberg.
Does the Senate will get to 7% in the coming months? Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run. With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. This month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium.
Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Danny Berger with us out of London. And I'm looking at the put-call ratio. This is an indicator that a lot of market participants were looking to signal capitulation during the downturn. Obviously, as it gets higher, more people are betting against the market. But now we've come to a low that we haven't seen for months. Denitsa Tsakova joins us, Bloomberg cross-asset reporter out of London, to tell us about this, I guess, more optimistic market positioning, even as we had stocks, fall yesterday, and it looks like futures are down a little bit today. Denitsa?
Exactly, that's what we're seeing. There is simply a little bit more demand for bullish contracts. And if we look at that chart, that CBO put and call ratio is actually at a 4-month low. So there is definitely some demand for upward bets. And this is very similar to what we're seeing to different data sets. If we go to the Bank of America survey, we're seeing that fund managers are cutting their very underweight equity exposure. We're also seeing retail investors having more appetite for stocks. Even hedge funds, which were the most bearish, are reducing their bearish position. And overall sentiment has sharply changed from super bearish to mostly bullish. But of course, we're coming from a place from extreme bearishness.
Well, that was going to be my question. Is it just sort of a function of that, or is there some fundamental shift, which means that there'll be follow through in the more bullish positioning?
It's too early to call a fundamental shift. All of those positions are mostly bullish, mostly bearish, so it's kind of too early. But we're seeing some reversal. If we look at CTAs, they're actually bullish on stocks, which hasn't been the case for a very long time. But what we're seeing today is that some of this very strong risk-on sentiment is taking a step back. So we're not sure if we're going to go in the same direction.
How much of that is tied to the trajectory of Treasury yields?
Well, for sure, this is a big part of it. We've seen, for example, growth and value, a big shift in where the balance has been going, with Treasury yields falling and then climbing. So obviously, we're yet to see what is the direction of the Fed, and we're seeing lower chances of a 75 basis point, but we're also seeing lower chances of rate cuts in 2023. So that would be very important.
Kaylee, just before the commercial break, was talking about Bed Bath & Beyond. We've seen some of these meme stocks regain vigor. Does that indicate to you anything about sort of the Fed, whether or not they've sort of pricked some of the speculative bubble? Maybe it hasn't gone away?
Yeah, for sure. There has been a very strong risk-on sentiment. Although what we saw yesterday is similar. Unprofitable tech, more shorted stocks were actually down on the day. So we're yet to see if that very strong idea that there will be a dovish pivot is still on, but it's definitely too early to call it quits, because those baskets are really up from their lows.
Right, Denitsa, thanks so much. That's Denitsa Tsakova from our cross asset team. And for more market analysis, head to MLive Go on your terminal. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. If we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of US greenhouse gas emissions.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Now, keeping you up to date with news from around the world, here's the first word. In China, the number of COVID cases has surged to a 3-month high. It's being driven by an outbreak in Hainan province that's the biggest since the spring. There were more than 3,400 new infections reported on Wednesday. More than 2,000 medical workers have been brought in to help. A new study highlights the mounting burden of chronic illness left in the wake of COVID. Researchers at the University of Oxford found that survivors remain at higher risk of psychotic disorders, dementia, and similar conditions for at least 2 years. The findings are based on the records of more than 1.2 million patients. In Norway, the central bank has raised borrowing costs to the highest level in a decade. It's also signaled a faster pace of future increases in a bid to slow inflation. Norges Bank lifted the benchmark rate 0.5 percentage point to 1.75%. And in the UK, the so-called summer of discontent is about to get worse. Britons face some of the most widespread disruption yet due to strikes by rail workers and bus and subway staff. That will be followed Sunday by an 8-day strike by dock workers at Felixstowe, the biggest container port in the UK. Danny, I feel like we talk about strikes in the UK all the time, but obviously some affect people more than others. I'm just wondering how hard it's going to be for you to get home from work.
That's a great question. You'd think that I would have had it figured out by now, how I get home not on the tube, but I haven't. But Matt, I gotta say, I felt like a New Yorker yesterday. My local tube station flooded because of the rain, bringing back memories of Manhattan.
I would, if I were you, just take a taxi, especially since you have the coolest taxis in the whole world in London. And I'd say, you know, I think it's understandable with more than 10% inflation that workers want a raise.
Yeah, exactly. Who am I to complain about that? And I get a great history lesson from a black cab driver on the way home, too. All right, well, coming up, we're going to be speaking with Hughes Van Landers, Senior Investment Strategist at Van Lanschot Kempen. This is Bloomberg.
VK ฟิล์มฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการร้อนดีราคาถูก
You will put a woman on Mars. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? It is high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Vidgen Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question. Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed plots its next moves against inflation. Policymakers see the need to slow the rate hike pace at some point, but they also want to gauge how monetary tightening is working. China plans more fiscal stimulus as the economic outlook worsens. Local governments will sell billions in bonds to pay for infrastructure and plug budget gaps. And news organizations want a judge to release most of the FBI affidavit that led to the search for documents at Donald Trump's house. But the Justice Department warns it could harm the investigation. I'm Danny Berger in London alongside Matt Miller and Kaylee Lyons in New York. Anna Edwards is off today. And Matt, I've been having a bunch of conversations with Mark Cudmore from the MLive team about the idea that this bear market rally is coming to an end. I gotta say, I'm feeling pretty convinced, especially since, I don't think we can say those FOMC minutes were dovish by any stretch of the imagination.
Well, it depends on whom you ask, right? Vince Signorella, our macro strategist at Bloomberg News, says he thinks they show that a pivot is coming. Meanwhile, Ben Emmons from Medley Advisors says, no way, Jose, they're worried about entrenched inflation. So I think that debate is a live one. We're not seeing really any judgment by futures this morning. They're relatively unchanged. In fact, right now they're just bouncing back and forth between gains and losses, but not moving much at all. Ditto with bonds. Not a lot of movement here. I mean, investors are buying bonds to some extent, pushing the yield down, but still less than 1 basis point. So we're at 288.77 there, and the 2-year isn't moving much more. I know the 2-year is more sensitive to views on what the Fed is going to do. The dollar index is gaining, on the other hand, and it's right now at 1274, so a relatively high level. Maybe that shows investors are seeking some safety. On the other hand, when things are going well here, investors buy the dollar too. So that really can't judge. And Bitcoin isn't really giving us an indication. I mean, it's up right now, but only by 2 or 0.3%, and it's still holding well under 24,000 at 23,473. So I think really the markets can't decide what to make of the Fed minutes and are going to wait until Jackson Hole, Kaylee, in order to make a call on dovishness or hawkishness. What do you see in pre-market?
Well, while it seems pretty steady on the surface level of the markets, there definitely is more going on underneath. And one of the most interesting areas to watch over the last several weeks has been the meme stocks, which have seen this this just incredible resurgence. Bed Bath & Beyond up 400% since late July, and yet it's giving back that gain a bit today, down about 12.5% after Ryan Cohen, one of the company's biggest shareholders, filed to sell as many as 7.8 million shares, so maybe looking to cash in after that really incredible surge. And you have other meme stocks like GameStop down about 4% as well. There's also earnings news that we continue to need to be on top of. Wolfspeed is a big semiconductor manufacturer, gave a really strong revenue forecast, far exceeding analyst estimates, plus they're expanding their production capacity. So as a result, that stock surging 21% in early hours. And you also had a beat on the guidance for Cisco. They're seeing revenue growth that exceeds what the street was expecting, partially just due to the easing of semiconductor shortages. That allows them to have more adequate supply, and as a result, that stock is up nearly 5% before the bell, Danny.
Kaylee, here in Europe, it feels like it's one of those classic summer days. European equities just sort of drifting. Most benchmarks are slightly higher. We're looking at a Euro Stoxx 600 that's up 0.1%. UK stocks, one of the few to be lower. And really, a lot of this has to do with the push and pull of the central bank story. Matt, you're talking about the debate among the Fed. I have to say, the BOE, it feels even more intense. You have Andrew Sentence now at PwC, formerly of the BOE, saying that they should double rates to 3 or 4%, while Danny Blanchflower talking about Bloomberg Radio says, that would be disastrous for the economy, which is heading towards recession. They should be talking about cutting now. Well, we had those UK inflation numbers yesterday that punished bonds here in the UK. We're looking at yields another 3.5 basis points higher at their highest since 2008. Likewise, for the 2-year yield in Germany, we're also seeing a move upwards of 3.5 basis points. Both Schnabel and Kazak speaking today about the need to have continued tightened policy and that the inflation picture still hasn't changed in Europe since the last rate decision. And finally, all